Hey investors, welcome back to StockSpot, your go-to podcast to unpack what's happening around the world of business and economics. It's me Lakshman MJ. Today we are diving into a sector that's quietly transforming how India consumes energy. Yes, I'm talking about the city gas distribution industry. Did you know that natural gas makes up just 6% of India's energy mix? But here is the twist. By 2030, the government wants this number to grow to 15%. And now the question over here is, how will they achieve this ambitious goal? And that's exactly what we will uncover in this episode. From growth drivers to challenges and future opportunities, we have got it all covered, so stay tuned till the end. The city gas distribution sector is a crucial part of India's energy infrastructure. It focuses on distributing natural gas to households, vehicles and industries through pipelines and refilling stations. Think of it as last-mile delivery system for cleaner energy. Currently, coal dominates India's energy mix, but natural gas is gaining traction because it's cleaner and more sustainable. The government sees natural gas as a key player in reducing greenhouse gas emissions. And this is why the CGD sector is being pushed to expand its reach across the country. Now let's see how big is the CGD sector today. In FY24, the CGD sector accounted for 20% of India's total natural gas consumption, making it the second largest consumer after fertilizer industry. Experts project that this share will grow to 25% by 2030. To put this simple, gas consumption in the CGD sector is expected to grow at a compounded annual growth rate of 10% from FY25 to FY30. This means consumption will rise from around 41 million metric standard cubic meters per day currently to 72 SCMD in FY30. Such rapid growth is supported by an estimated investment of Rs 30,000 crore over the next 3 years. With that said, now let's see what's driving this growth. The adoption of CNG vehicles is one of the biggest drivers. Between FY18 and FY24, registrations for CNG-powered three-wheeler vehicles surged 2.45 times. Now CNG accounts for 60% of CGD consumptions. So more vehicles mean higher demand. Additionally, the number of CNG stations has grown from 1,730 in 2019 to 7,444 by December 2024. Another key segment is piped natural gas for domestic use, which currently covers around 5.8% of India's LPG usage. Gujarat leads in domestic piped natural gas adoption with 40%, but other states like those in East, Northeast and South have significant untapped potential. Now moving on to challenges facing the CGD sector. Despite its growth, the CGD sector faces several hurdles. First, there is competition from alternative fuels. For instance, LPG cylinders are subsidized by the government, making them cheaper than domestic piped natural gas for cooking. Similarly, electric vehicles are emerging as competitors to CNG-powered vehicles. However, EVs still face challenges like high initial cost, lack of charging infrastructure, and battery replacement expenses. Another major challenge is the imbalance between natural gas supply and demand. While domestic gas production has increased, it's not enough to meet the growing needs of CGD sector. By FY30, reliance on RLNG is expected to rise from 26% in FY24 to 55%. This dependence exposes the sector to global price fluctuations. Now moving on to infrastructure bottlenecks. Infrastructure development is critical for CGD sector's success. The government's One Nation, One Gas Grid initiative aims to integrate the national pipeline network, targeting 34,000 kilometers by 2032. However, progress has been slow, with only about 50% of medium-term work plan targets achieved so far. Delays in land acquisition, regulatory approvals, and construction obstacles are some reasons behind this sluggish pace. So without timely completion of trunk pipelines and its connection to national grid, the sector's growth could be hindered. Now looking at pricing and allocation issues, pricing plays a vital role in CGD sector's profitability. Under the administered price mechanism, CGD companies receive priority allocation of domestic natural gas. APM gas is cheaper than other sources, but its availability is limited. In late 2024, domestic gas allocation to CNG segments dropped by 40%. Impacting the profitability. Although allocations improved slightly in Jan 2025, the overall supply remains below pre-October 2024 levels. To stabilize prices, the government introduced measures like Indian Gas Exchange and implemented recommendations from the expert committee. These steps aims to reduce volatility and ensure fair pricing. Now, to talk about financial performance of CGD players, financially, the CGD sector is performing well. Revenues have grown at a CAGR of 18% from FY 2020 to FY 2024 and are also projected to continue at a similar rate until FY 2027. Early entrants dominate the market, holding around 70% of volume share. Next, profitability measured in terms of EBITDA per standard cubic meter moderated temporarily in FY 24 due to lower APM allocation. However, it's expected to recover from FY 26 as volume increases and fixed costs are absorbed. Finally, debt to EBITDA ratios remain comfortable, ensuring financial stability despite ongoing capital expenditures. Now, looking ahead, the CGD sector is poised for strong growth. With plans to establish 18,300 CNG stations and 126 million domestic piped natural gas connections by 2032, the industry is set to play a pivotal role in India's energy transition. But achieving these targets will require overcoming challenges like timely approvals, pipeline expansion, and managing LNG imports. If successful, the sector could significantly boost natural gas consumption, contributing to a cleaner and more sustainable energy future for India.